In today's world, earning $129,000 a year should mean you are successful financially, secure and living a comfortable life. But what if, despite earning this amount, you still feel broke, struggling, stressed, and constantly behind on expenses? Because this is not a rare situation anymore. In fact, for millions of people, especially in developed countries, $129,000 is starting to feel like the new middle class, or even the new poor. And this sounds shocking, because not long ago, this level of income would place someone in the top tier of earners with access to a great lifestyle. But something has changed, and that change is not just about prices increasing or inflation rising. It is something deeper, something structural that is slowly reshaping the entire economy and the way money works in modern society. Because if we go back just a few decades, earning a six-figure salary meant financial freedom. It meant owning a house, saving for the future, raising a family comfortably, and still having money left for luxuries. But today, that same salary often feels like it is barely enough to keep up with basic living costs. And this raises a powerful question. How did we reach a point where high income no longer guarantees financial security? And to understand this, we need to break down what is actually happening behind the scenes of the economy. Because the truth is, most people are not getting poorer in terms of numbers. Their salaries are increasing over time, but their purchasing power is not keeping up, which means even though they are earning more, they can afford less. And this is where the illusion begins. Because on paper, $129,000 looks like a big number. But in reality, after taxes, housing, healthcare, education, transportation, and daily expenses, there is very little left. And this is not because people are spending irresponsibly, but because the cost of living has increased at a much faster rate than income growth, especially in major cities where most opportunities exist. And this creates a situation where people are forced to spend a large portion of their income just to maintain a basic standard of living. And housing is one of the biggest reasons behind this shift, because in many developed countries, the price of homes has increased dramatically over the past few decades, far outpacing wage growth, which means even high earners struggle to afford property without taking on massive debt. And when a large percentage of income goes into housing, it leaves very little room for savings, investment, or financial security. And this problem is further amplified by rising interest rates, which make mortgages even more expensive and push people into long-term financial commitments that limit their flexibility. And at the same time, other essential costs, like healthcare and education, have also increased significantly, especially in countries like the United States, where these services are not fully subsidized, which means individuals have to bear a heavy financial burden just to access basic needs. And when you combine all of these factors together, you start to see a pattern where the modern economy is designed in a way that absorbs most of a person's income, leaving them with very little financial freedom, regardless of how much they earn. And this is where the concept of relative poverty comes into play, because poverty is no longer just about absolute income levels, but about whether you can afford the lifestyle that is considered normal in your society. And if you cannot keep up with rising costs, even a high income can feel insufficient. And this creates a psychological pressure where people feel like they are falling behind even when they are technically earning more than ever before. And this pressure is reinforced by social expectations and lifestyle inflation. Whereas incomes rise, so do expectations about housing, location, education, and overall quality of life, which forces people to spend more just to maintain their social standing. And this creates a cycle where higher income leads to higher expenses rather than higher savings. And over time, this cycle becomes difficult to escape because the cost of maintaining that lifestyle continues to increase. And this is exactly why many people earning $1,900 still feel financially stressed, because they are trapped in a system where income growth is constantly being offset by rising costs and increasing expectations. And this is not just an individual problem, but a systemic issue that affects entire economies, because when a large portion of the population feels financially insecure, it impacts spending behavior, investment decisions, and overall economic stability. And this is where things start to get even more interesting, because while the middle class is feeling this pressure, the wealthiest individuals and corporations are experiencing the opposite effect, where their assets are growing rapidly and their financial position is becoming stronger. And this widening gap between income and wealth is one of the key reasons behind the changing perception of what it means to be rich or poor. Because wealth is no longer determined only by income, but by ownership of assets like real estate, stocks, and businesses, and those who own these assets benefit from rising prices, while those who rely only on income struggle to keep up. And this creates a situation where even high earners can feel poor if they do not have significant assets. And this is one of the biggest shifts in the modern economy, where the focus has moved from earning money to owning assets. And those who understand this shift are able to build long-term wealth, while others remain stuck in a cycle of earning and spending. And as this gap continues to grow, the definition of financial success is changing, and what used to be considered a high income is now becoming the new normal or even insufficient in certain areas. And this raises an important question: if $129,000 is no longer enough, then what does it actually take to feel financially secure in today's world? And more importantly, is this trend sustainable, or are we heading towards a future where even higher incomes will feel the same pressure? And this is where the real story begins, because what we are seeing today is not just inflation or rising costs, but a fundamental shift in how the economy distributes wealth, opportunities, and financial security. And understanding this shift is the key to navigating the future, because without it, even the highest salaries may not be enough to escape the feeling of being financially trapped. But what makes this situation even more surprising is that the problem is not just that things are getting expensive, but that the entire structure of the economy is shifting in a way where income alone is no longer enough to build real financial security, because in the past, people relied on salaries to climb the economic ladder, where a stable job, steady income, and gradual promotions were enough to buy a house, raise a family, and retire comfortably. But today, that model is slowly breaking down as the gap between income and asset growth continues to widen, which means while salaries increase slowly, assets like real estate, stocks, and businesses grow much faster, and this creates a system where those who already own assets keep getting richer, while those who depend only on income struggle to catch up, no matter how much they earn. And this is why someone earning $129,000 today can still feel financially stuck, because their income is being constantly consumed by rising living costs while the price of assets they need to build. Wealth continues to move further out of reach, and this leads to a critical shift in the definition of wealth, where it is no longer about how much you earn, but about what you own, because ownership generates passive growth, while income requires continuous effort and time. And this difference becomes more significant over time as compounding starts working in favor of asset owners, allowing their wealth to grow exponentially, while income earners remain limited by their salaries. And this creates a long-term imbalance, where even high earners can fall behind if they do not transition from earning to owning. And at the same time, governments and central banks play a major role in shaping this environment through monetary policies that influence interest rates, inflation, and liquidity. And over the past decades, policies that encourage borrowing and spending have made assets more expensive, while making debt more accessible, which pushes more people into financial commitments, like mortgages, loans, and credit systems that tie up their future income and reduce their ability to invest and build wealth. And this system works in a way where money flows towards assets first, increasing their value, and only later reaches wages, which creates a delay between asset growth and income growth. And during this delay, the gap continues to expand, making it harder for income earners to keep up. And this is one of the hidden mechanisms behind why high salaries feel insufficient, because by the time wages increase, the cost of living and asset prices have already moved ahead, and this cycle keeps repeating, creating a constant feeling of being behind, regardless of income level. And another important factor is geographic concentration, where high-paying jobs are usually located in cities with extremely high living costs, which means even though salaries are higher, expenses rise proportionally or even faster, leaving little net advantage. And this creates a situation where moving to a better opportunity does not necessarily improve financial stability, because the cost of accessing that opportunity is equally high. And this is why many professionals feel trapped in a system where they are earning more but saving less. And over time, this reduces their ability to build long-term wealth and increases financial stress and uncertainty. And as this pressure builds, people start looking for alternative ways to achieve financial security, such as investing,